It's the 5th day in the month of September. Slowly but surely, the year is drawing to a close. The ember months are upon us. So let's get to do some work before we wake up and see the year is over. You're welcome to Business Morning here on Channels Television. I'm Ini John Mekwa. We start off with oil prices. It jumped over $1 a barrel today, extending gains as investors eyed possible moves by OPEC Plus producers to cut output and support prices at the meeting. And that will be later on today. Brent crude futures rose by $1.88 to $94.90 a barrel, while U.S. West Texas Intermediate crude futures was at $88.60 a barrel. And that's up $1.73, following a 0.3% advance in the previous session. U.S. markets are closed for a public holiday today. At their meeting later on today, OPEC Plus may decide to keep current output levels or even cut production to bolster prices despite supplies remaining tight. Russia, the world's second largest oil producer and key OPEC Plus member, does not support a production cut at this time, and is likely the group will keep its output steady when it meets. Oil prices have fallen in the past 3 months after touching multi-year highs in March on concerns that interest rate hikes and COVID-19 curbs in parts of China, which is the world's top crude importer, may slow global economic growth and cool oil demand. Negotiations to revive the West 2015 nuclear deal with Iran have dragged on through an agreement that could allow Tehran to increase exports and improve global supplies. To the commodities market now, Malaysian palm oil futures firm today, lifted by higher soy oil and crude prices, but anticipation of rising supply kept the contract near a 1-month low hit in the previous session. The benchmark palm oil contracts for November delivery on the Bursa Malaysia Derivatives Exchange gained 15 ringgit, which is about 0.38% to 3,930 ringgit, and that's $876.25 a ton by midday. Palm slumped 6% last week after key buyer China imposed fresh COVID-19 lockdown measures in the cities of Chengdu and Shenzhen to conduct mass testing, raising concerns over the demand for the edible oil. The contracts opened higher following strong closing of soy oil on Friday. Nevertheless, selling pressure was seen on expectations of higher production and inventories. The Malaysian Palm Oil Board is scheduled to release August supply and demand data next week, with traders and analysts pegging inventories to swell above 2 million tons. And now to Nigeria. The Minister of Agriculture and Rural Development, Dr. Muhammad Abubakar, is expressing optimism that the ban on Nigeria's agricultural commodities by the European Union and the United States of America will be lifted soon. He was speaking to press at Interministerial Technical Committee on Agro Zero Reject Initiative in Abuja. Well, Dr. Abubakar explains that the current efforts are being made by the federal government to ensure Nigerian agricultural produce is accepted in the international markets.
There is no doubt that Nigeria cannot realize its potential unless we do the right thing, work together first of all, and also realize and understand dealing with other agencies, private sector, government across the world. It's not an easy task. Doing an export business, there are so many regulations. And unless you start by putting your own home well, you will not be able to work with other people outside. So we commend our development partners who have supported the SIMTC to produce the integrated export control plan, of course being a key requirement from our European partners in lifting ban imposed on our beans and that since 2016.
All right, so back Backward integration in manufacturing is what we're discussing next. Backward integration means local sourcing of raw materials as an import substitution policy. In Nigeria, data shared by the Manufacturers Association of Nigeria show that local raw materials utilization in the sector declined year on year by 5.4%. Points in the first half of 2020 by 3.5% in the first half of 2021. Well, little wonder Nigeria's import bill keeps surging, increasing. What should manufacturers be doing? What are they doing at this time? We have a member of that association, even though she's here to speak as a managing director, chief executive officer of FAY Limited, Princess Fundayo Bakari Okowo. Good morning, Princess. Thank you so much for joining us.
Good morning.
So how are things? I know we're talking about backward integration, but these days when you talk about inflation, talk about the issue of exchange rates, availability of FX, and how it's affecting manufacturing. Tell us, paint the picture for us. How are things for manufacturers in Nigeria at this time?
Thank you very much. Backward integration is the best thing that happened to Nigeria. But I'm afraid presently everything is stagnant and is going downward every day. I mean, when you really look at it, we need a conducive environment for backward integration to thrive. For example, NEPA, I don't want to repeat all what everybody has always been talking about, but it's a big problem. Power supply, it's a big problem. Secondly, overzealousness of government-appointed agencies. They believe they can do and undo. Corruption and infrastructure too. It's a big problem.
What do you mean by government agencies feeling they can do and undo? There are laid down rules that everyone
There are laid down rules. Are they being followed?
Like in what area?
Let's look at the ports.
Okay.
Corruption at the ports. It's there. And it's not yet been addressed. When you look at also, even as we have signed AFCTA, for example, you cannot believe it. It's cheaper sending goods to Europe than sending goods to Ghana. I mean, there should be, yes, there are some incentives, but when it comes to that corridor, there should be incentives for the shipping companies so that a lot of them will have interest plying that corridor. It's so expensive. And also, when you look
what
at...
actually makes it expensive? I mean, it's not news that it's cheaper to send things outside Africa than in between African countries.
It's not cheaper, please.
To send things outside Africa compared to in between African countries.
African countries is not cheaper.
Yeah, that's what I'm saying.
Yes.
It is cheaper to send things outside Africa than in between African countries.
Yeah, because you don't have much shipping companies plying that route. But if there are incentives and it is attractive, you have a lot of them.
But it's a business. Shouldn't private sector, members of the private sector, get on board, get ships and make money out of it?
The incentives are not there. And when you want to go by road, there are a lot of insecurity there.
There's also insecurity on water.
Well, if you look at, if we are to compare, the difference is still much more better going by sea, one. Then two, it's even cheaper. Shipment by sea is cheaper. At least you are able to carry volumes. And all these agencies, you won't find them on the road.
On the water.
On the water. But on road, you will find them, which they will always stop you.
So you're saying that one of the reasons why it's more expensive for us to practice. I mean, let's stay on AFCFTA,
Yes.
which is supposed to be a pride. Ghana has started.
Yes, they've started.
Ghana and I think some other 17 countries have started. So what are they doing that we're missing? You talked about a lot of regulatory agents or agencies on the road, increasing costs. And then the lack of shipping companies on water because of no incentives. Now, when you talk about incentive to get people to, get on the water, what kind of incentives are you looking at?
Tax. There are so many. I'm not an expert when it comes to shipping because I don't want to talk authoritatively on their business. But I believe that if it is attractive, for example, my company personally, we have tried to export outside Nigeria by road, even with our correct papers. But I nearly had hypertension because they kept on calling me this roadblock, that roadblock. Can't it be reduced? Yes, there is a desk when you go to the border, but are they effective? Can't everybody do their work properly? Because this thing, it's becoming a canker worm. Now, there's no dollar in the country. Backward backward integration is the answer. Why can't we help? I mean, we need to put our house in order to make sure it works.
So when you talk about backward integration, you did mention some hurdles, the issue of insecurity, infrastructure. But I know that when, for instance, the NIDCOM boss spoke some time ago, she talked about how people who are abroad are looking inwards and seeing opportunities. So it looks like there are still opportunities in spite of these challenges. So what can we do to really boost this backward integration in spite of the challenges that we do have?
We need to have the political will to hire and fire. We need to have the political will. If we are saying that, why are we having a shortage of inflow of dollar into the country? It's because of our somersaulting policies when it comes to forex. And nobody will want to invest in any economy that is not stable.
You don't think that the election coming up is also a factor?
I don't think so. Every country, yes, election will always come and go. But don't we have this problem even before election? The problem has always been there. We need to have the political will to deal with the situation. That is the only way, because we've all seen that the only thing that can help us is backward integration. And by this backward integration, we are industrializing Nigeria. And if Nigeria is being industrialized, dollar will come in.
But are manufacturers ready to use local raw materials?
Why not?
I've met someone who pops corn and imports her corn. She sells popcorn and she imports the raw material, which is corn.
That might be correct. Most manufacturers, 90% of what they use as raw materials now are imported. That is where technology comes in. Skilled technologists, we need them. There's a lot of, I'm sorry to say, there's a lot of encouragement when it comes to well, everybody has problem in their sector, but we need to let ourselves know that technology is very, very important everywhere. If the manufacturer you are talking about, if it's importing corn, it's because the farm that he might have get his corn from, they don't have the technology to meet up, the technical expertise to meet up and produce the type of quality that is needed to produce that corn. I don't want to jump gun, but when you look at my own sector, for example, because I read one of your questionnaire, you said one of my interviews that I said
The paper industry should equate oil revenue generation.
Yes, I make bold to say it. Why I'm saying this is that I will relate it to technology. In paper, we need a paper research institute. We need functional paper mills. If you look at the price of paper now, is about $1,300 per ton. If you look at pulp, it's about $1,000 per ton. It will be a beautiful idea if Nigeria is exporting that paper. And we have our raw materials here. I will tell you. We can use KNAF to produce paper. Yes, years back, you use the likes of Melina, eucalyptus, which will take gestation period of about 12 years. But now, nobody is ready, no investor is ready to invest for 12 years to get return on his or her investment. So, but with the KNAF, it takes 6 months gestation period. We can use bamboo to produce paper. We have it here. We can use our ewedu, jute, to produce paper. We have all our raw materials here to do it. So if we export, you have the printers, you have the publishers, you have the corrugators, you have all sectors. If you look at Soposet in Portugal, you can Google it. It's a paper mill in Portugal. They are very, very big all over the world. They are the highest contributor to their GDP in Portugal. So, I'm not wrong if I say paper can substitute oil.
That's a big one. I'm not sure today is the day to have that conversation comparing paper and oil industry. I'm sure a lot of people would disagree with you, but Princess, we have to thank you so much for coming this morning. Princess Funla Bakari Okawo, the Chief Executive Officer of FAY Limited. But it would be nice actually to see more backward integration, especially like in your industry where, as you mentioned, we have everything raw material here. And if we're talking about boosting FX supply in the country, I mean, what better way to do it than that? Thank you so much for sharing your thoughts this morning.
Thank you.
Enjoy the rest of your day.
Thank you. Bye-bye.
Let's take a break now. And we come back from that break. The 28th Nigeria Economic Summit is in October, but we will talk about what to expect because guess what? They are looking at the political economy. Find out more after the break. This is Business Morning on Channels Television. You're welcome back. Priorities for shared prosperity is the theme for the 28th Nigeria Economic Summit, which is slated for next month. With the drums of politics sounding high, it is commonplace to discuss how politics is shaping and is expected to shape the economy. We have joining us for that conversation Mr. Chinenye Mbauzoku. He's the Managing Director of GC Africa and the Chair, Central Organizing Committee for the 28th Nigerian Economic Summit, which of course is holding next month. Good morning, Mr. Ozoku. Thank you so much for joining us this morning.
Good morning, and thank you for having me.
Yeah, so preparations are on. We see that and we hear that. That's why obviously you're here. But when you talk about priorities for shared prosperity, tell us what are your thoughts? Why do you have this as your theme?
Thank you very much. Look, the Nigerian Economic Summit has been held, the first one was held in 1993. And over the past 29 years, this big organization has consistently focused on the requirement for building an economy as a basis for a powerful country with well-being at the top of its agenda. The well-being of the citizens and how they depend. In order to have a strong fight and a happy society and with our full potential, we need to support them. And so the Nigerian economy comes to have a complete society to build. We've seen over the years, however, that there's been a gap between the private sector and the public. And so the primary focus of the NLC is to hold these guns, to have conversation, a good conversation, as we make bringing together the private and public sector is possible. Issues that we believe identified through research and analysis that are pivotal in changing the course of the economy. You might say that over the years, we've that, but it's not something that we have to talk. Conversation about very well, we have pivotal moments to find that person. And so we started the theme 2023 and beyond. Primarily because we understood that this was by the and that 2023 was the year that most Nigerians have huge deficits. We've been talking about Nigeria facing several crises, facing the existential crisis. The idea was to say, okay, well, just going to what happens after the crisis? Our goal is to help to shape collective discussion, analysis, and decision making. Arrive at an economic agenda that the next administration will carry through into 2022 and beyond. And that has to be the conversation that involves all of us. And so we find ourselves strongly focused on the economic agenda, but very, very aware that no matter what other economic agenda we have, the political sphere will have a strong influence on the economic agenda.
All right. So, from your perspective, you economists, now, how disruptive? Because a lot of times when we talk about market activities and how investors are acting and reacting, the fact that the election is coming up in a couple of months seems to be a disruptive factor, creating a lot of uncertainty, in the economy. But how disruptive is this upcoming 2023 election? And must election be disruptive?
First of all, just a quick correction. I'm not an economist, but I, like every other Nigerian, we don't have to manage the economy, the economy. We're all part of the country. I would say, though, that after about 20, 30 years of business, indirectly, we have something. But we recognize everything I say is based on data that is produced, gathered, and analyzed by industry. Here's the reality of where we are. Every country in the world that goes through and goes for election has some level of development. Market facing what's going to happen with the income and how we how the existing incumbent administration head. And so they become a little more focusing what to do. They try to make the body they go through all the things. They look at politics and how far they can politics They look at what the global the macro environment is looking like. Look at nationally, locally, and globally. And this is where that interface between the public and the private sector becomes pretty important. So when the wrong thing goes against the private sector, what they do is that they start to be more cautious because they have to recognize the complaints that they have in terms of the business that the business is part. And similarly, the private, the public sector also has recognized that business has. So yes, there is. But what makes this very unique, I think, is the series of crises and address including very importantly the COVID-19 pandemic, which has fundamentally changed the business industry and changed and has challenged everybody to look at digital transformation process that has implications for everyone, from remote working to right sizing to heavy investment in technology sector that may or may not access for communities, to the implications for the people who are not part of the digital economy presently. Everyone is being affected. In Nigeria went through a number of recessions before we came into COVID. And post-COVID, those things are good in terms of GDP. We have always known, I think for well over 10 years, Nigeria has been growing GDP without spending to stop. We recognize the crisis around young people and unemployment and underemployment. We recognize the challenges that we are having for money. And then the fundamental challenge that we face as a country, where we are not producing and exporting enough. Our demand has been constantly on oil. So even though we see growth in the services sector, the key question is how has that translated into an advantage for us in terms of how much oil the country is filling in? And what do we need to do to build that? So we recognize that disruption. We understand the disruption model as a pattern across all countries of the world. But we are very specific in terms of understanding that Nigeria is a very real term and perhaps not an essential one, but certainly one that threatens businesses for the individual on the street. And we have a responsibility to have that conversation, to turn that conversation back to Europe and then for the incoming administration. Hence, some I don't need to tell you, what the impact is having over that on people have been coming out of COVID, the challenges around health, the challenges in the transportation. Your earlier guest talked about the poverty in the manufacturing sector and the inability to conduct the rate. Every organization is feeling the effect of that, and this flight of our strongest human capital, trying to lead this country at maybe unprecedented level, growing level, maybe unprecedented impact in terms of great capital economy, given that we're pushing to the digital economy.
All right.
So there are many things that
right.
are coming together.
All right,
And I make it very, very important.
Yeah, all right, Mr. Ozoko. Channel Television is certainly following that summit, and we do hope as you prepare that you also fix in some features that will make it more than a talking event, and then
Absolutely. We have 5 plenaries. We have 5 plenaries, 5 industry meetings, 10 interactive panels, 2 design workshops, 1 gender summit, one global summit, and most importantly, we have big surprise coming to and the summit itself now. But it's all about engagement. And we really want everyone to go. We're looking at 4 pillars on macroeconomic stability, investing the future, which is a strong focus on our young people and what has happened to them, enable them to become participants in the economy. We're looking at unlocking the binding constraints and which really empowering the private sector to work with the public sector, work effectively with the public sector.
Okay.
And then most importantly, we want to transfer leadership. We have to have the right people in office to drive our things.
All right,
Thank
Mr.
you.
Zoku. Yeah. Too much information.
I know we're out of time.
Too much information. Well, thank you so much for your time this morning. Of course, we will, and we'll be there, God's grace.
Look forward to seeing you.
Sure. That's it ahead of the NESG Summit, which is holding next month. Of course, we cannot have major conversations now without infusing the political factor, even in the markets. Politics and sentiments affecting the numbers. That's what Anita is joining us to speak to now. Anita, good morning. We can see that you do have the FX week ended the 2nd of September. I wonder how much political elements we have.
Well, for the forex markets, we wouldn't really say if it's a political element, but we can talk about the political elements when it comes to the fixed income markets as the bonds market.
Yeah, I mean, even in the FX, I mean, remember that the central bank governor had said that a lot of politicians seems to be going the route of dollars to help them carry huge sums of money, and of course that affects FX available for transactions for traders and manufacturers and all of that. So I guess everything has a little bit of politics in it.
And don't forget, Nigeria has now become what you might call a dollarized economy. So,
I hope not. I hope not, because we thought that was happening in the aviation sector, and they did come out to say that the airlines are not requesting for dollars. So, I mean, we cannot say for sure that Nigeria has become a dollarized. I mean, that's illegal.
Yeah, I think we'll leave that to the Central Bank of Nigeria to explain, to really clarify. But well, since we're talking about the forex market, let's flip over to the forex market. Yes, it had a mixed turnout at the close of, as at the end of Friday last week, September the 2nd. This is how it turned out at the end of the week. 10.11% is what the forex market closed. Quite a mixed bag. That's where you see there at the FX spot market, up by 15.95%. The same thing for the forwards market. It was up by 68.41%. But when you take a look at the futures and the FX derivatives market, it's on the flip side, 7.56% and 1.15%. So that shows you that it was kind of a mixed bag for that market. Let's turn over to the next page of that market. Let's go back to the INE window. The INE window, it was up by 15.95%, and the total value of transaction carried out there was 704.5 million naira. Let's take a look at how the local currency performed. It was down in contrast to what it printed last in the previous week. It was down by 0.15%, and then it closed at 428 naira 44 kobo at the NAFEX window. But mind you, at the official market, it's 425 naira. That's at the CBN's official rate for the market. But we will have our analysts to talk to us, to Lope Sebanjo. So let's get a glimpse of the fixed income market, to be precise, how it turned, what to expect for this week, particularly when we take into cognizance what happened last week. Thank you for joining us, Lope.
Thank you very much for having me. So the fixed income market has been both bearish and bullish. For last week, we saw a bit of loosening regarding the liquidity as we got FAC credit coming to the system of about 490 billion, which enabled market participants to at least take on some of the securities available in the market. However, the underlying sentiment is still bearish, as markets still expect a tightening liquidity going into the week. We also had the CBN coming to the market to float an OMO auction, where they offered a total of 50 billion across the short, medium, and long-term maturities. However, we saw them sell just 10 billion on the shorter end of the curve and 40 billion on the long end, while they maintained stop rates at 7% and 10.1% respectively on both the short and long end of the curve. There was no sale across the medium tenor security offered. Going to this week, we expect that the DMO will come into the market as there's an NTB maturity. We expect them to float an NTB auction on Wednesday. A total of 215 billion is maturing. Bulk of that is on the 365-day maturity, where 192 billion of that is maturing on Thursday. So we expect the DMO to conduct an auction on Wednesday, and we expect a marginal hike in rates, given that market sentiment is towards an upward movement in interest rates.
Okay, so now in a couple of weeks from now, let's say more than a week from now, the upper week, probably on the 15th or the 16th of September, we will be expecting the August inflation report to be released by the National Bureau of Statistics. So what do you think, or how do you see that the market would be, which position do you see the market tilting towards once that inflation report comes out next week?
I mean, market is expecting a further increase in inflation rates, given the increase in food prices that we've seen, increase in transport costs. We've seen that, and market has already priced that into the yield being offered at the moment. So we expect that inflation will increase. We don't really see that having any significant impact in the market. Market has already priced it in our trading activities, so we've already factored in inflation that is going to go up. And then particularly regarding the NTB auction scheduled for this week, we expect market participants to go into that auction bidding at a higher interest rate, given that the last auction we saw an increase from 7.45 to 8.5%. So at this auction, we expect the market will bid as high as 9% and 9.5%. Given that, we're already in negative return, given where inflation is at the moment.
Okay, thank you for that analysis, Tolulokpe. And then, of course, we always keep our eyes on the markets, and definitely we will continue to keep our eyes on those three markets at the fixed income space. So that was Tolulokpe Sebanjo, fixed income dealer at Access Bank. Now, let's move over to the equities market. This is how it turned out at the close of the, what you might call the mix in between the end of August and the first 2 days of September. 0.73%, which is about over 192 billion gain at the market. Don't forget, the market started the week on a bearish note, but ended on the upswing, 0.73%, and way above the 50,000 mark. As at the same time, the market's capitalization, what you call the total value of listed equities or equities listed on the Nigerian exchange, is almost at the 27 trillion naira level, which it had lost so a couple of weeks ago. So let's move over to the activity chart. It was also a mixed bag there. The value was down in contrast to what you had last week, while the volume as well as the deals were up. Investors at the same time there was much bargain hunting for some of those high value equities, which had dropped a couple of weeks within the month. And then when you take a look at the month to date gain, it's up by 0.4%, while the year to date gain is still maintaining the uptrend. 17.716% is what it turned out. Then take a look at, it's all green arrows across the board on the sectoral performance. So that's it for that market. Well, if time is there, I should have taken much more markets. But Ini, I don't know if maybe you give me more time to talk more about the markets.
You have more time tomorrow, Anita. Well, it was a surprising comeback in the equities last week. We didn't expect it to end in the green, but it sure shocked us, and contrast to other markets in other parts of the world. But we're always on the other side. Thank you so much for the market analysis, Anita. The next stop will be London, but that'll be after the break. It's still on Business Morning on Channels Television. Still having business conversations here on Business Morning on Channels Television. Now we head to the UK, where Juliana, our correspondent, is standing by. Juliana, good morning. Well, I saw you on Russia invasion this morning, and I saw the excitement of the new Prime Minister and all of that. But before we get to that, I know it's the biggest deal in the UK at this time, but we can't seem to run away from the issue of energy bills. Now, manufacturers are cutting production, cutting jobs, really getting worse, looks like.
You're absolutely right. Good morning, Ini. I think I did see you on the Russian invasion discussion too. But it's a huge issue, rising energy costs, and this is an issue that's not only affecting millions of families and households across the UK, but it's also affecting businesses. And one of the main reasons why it's affecting businesses is because we don't have an energy price cap for them. So they are suffering from mounting bills as well as soaring prices that they've already had. In fact, I was listening to one chap who owns a factory this morning. He opened an envelope of a bill of £20,000 per year. That was his quote, and he simply cannot afford it. So what we're hearing now is from big business manufacturing lobby groups. We've already heard from the British Business Chamber of Commerce last week. We also heard from Make UK, which represent about 20,000 manufacturers. We've also heard from all other lobby groups asking for assistance guidance from whoever takes over as Prime Minister, which we'll find out in a couple of hours. And they're asking for several things. I think the big thing is they want to see an energy price cap. So similar to what we see when we are talking about residential, they also want it for businesses. Lots of these businesses are also talking about what they call ancient business rates, which have been upended during the pandemic because we realised that so many big online firms are getting away with not paying their fair share, where the bricks and mortar businesses are. And they also want to see a cut in VAT. Now they're expecting a cut from perhaps 20% to about 5%. It may seem unreasonable, but certainly what we saw during the pandemic, where tens of thousands of pounds of grants and loans backed by the government were doled out, that's exactly what businesses need to be able to keep their lights on in what is going to be a very bitter, cold winter.
Wow. Not a bright picture at all, Juliana. But I think we'll have to push that Prime Minister conversation for BizInc. But I do know that by then we would know who the new Prime Minister is. And then we'll have a longer conversation because, I mean, you just noted some of the responsibilities and expectations, you know, from the incoming Prime Minister. So we'll talk to you at 1:30 and we'll have an elaborate conversation on that.
Thanks.
All right, it's an exciting day in the UK today. While the US is on holiday, but the UK, they're going to know their next Prime Minister, and that will be in a couple of hours, as Juliana has told us. So at 1:30, you need to join us for that conversation to know exactly who and expectations and conversations on that. For now, let's go to the crypto space and see what's going on with that. It doesn't look like it's a better, brighter picture. It's just the equities, Nigeria's equities market, that seems to have escaped, you know, all those gloomy stories. But when we look at the numbers, there you go, we have it there. It's still extreme fear. I think it was 20 on Friday, and now we have this. So it's still a fearful market. Investors are not comfortable, and while they do say to buy the dip, but doesn't look like the dip. I know that our analyst Michael Nudge had said on Friday that we're still heading to about 10,000-15,000. Perhaps that's the dip that a lot of investors are waiting for. Maybe that will bring back the market. But there you go. The market cap is in the positive 0.25% at 976.48 billion. 24-hour volume also in the positive 15.70% at 50,000.82 billion. BTC dominance has dropped by 0.05%, not so much. It's still a bearish market everywhere, 38.74%. If we see, okay, top alts by market cap, all in the red, the majors, these are the big guys in the market, in the red, BNB, Cardano, Doge, XRP in the red, and there you see there 0.15 for BNB, Cardano 0.03, marginal though, Doge 0.062, marginal XRP much more, 0.65%. And for the price of Bitcoin, still sticking. On Friday, at least we did close at 20,000, but over the weekend, it just went down to 19,000 and stayed there. This is 24-hour volume as at 8 a.m. I wonder if it has gone back to the 20,000, but it's up 0.38% in the last 24 hours, and the volume at 28.16%. Price of Ethereum also in the positive, 1,567, up 1.23%, 24-hour volume, 10.17. We have Rumi Ofi now joining us to have a short conversation. Hey, Rumi. Rumi, good morning. Not a very good Monday, but a nagging question, Rumi. Crypto.com walked out on a nearly $500 million sponsorship deal with Major European League. Why? What happened?
Good morning, Ini. If you ask me, it's a good decision because no one wants to get into such huge amount, $500 million. A lot of persons actually love the league. Let's not also forget that this is not the first sponsorship that Crypto.com is supposed to do. They have actually renamed one of the biggest stadium in the US, Spetal Arena. It actually was named Crypto.com Arena. So they have this appetite for getting involved in sport. But in this case, I think that it's had to do with a lot of regulation issues, right? So they are taking a very good decision regarding key issues on regulation, most especially from countries like France, the UK, and Italy. No one wants to get involved and find out that they're stuck with some set of regulation, so it needs some redress. And I think I also need to remind a lot of people that Crypto.com is a proud sponsor of the FIFA World Cup that's going to host about 1.5 million people in Qatar. So it's good they have a redress so they don't miss out. That's a huge amount of money, $500 million.
$500 million. Rume, I'm just imagining if they had gone ahead with that sponsorship, what do you think the market would have looked like this morning?
The market is actually bigger than that amount. The market has grown significantly over time. Now, if you put $1 billion in the market, it will really check the market because the market has actually grown significantly. But what I think is most important that what was supposed to happen on this, if it has been done, it would have been an exposure, right? In UEFA Champions League, a lot of Nigerians watch football. A lot of people watch football these days, So seeing that as crypto is going to expose a lot of usability. That is, adoption is going to be out there, and it makes a lot of sense. The money will always come, but the adoption is more important. But we need education before adoption.
All right, Rume, thank you so much for sharing your thoughts with us. We do hope that we see a little bit of positive movement in the market this week. I'm tired of reporting the extreme fear.
All right, let's hope we get good prices and a lot of things happening in Europe. The energy prices the market is also listening to all of this. So let's hope all of this comes through. The market is going to smile for us.
All right, thank you so much, Rume. Enjoy the rest of your day.
Thank you very much, Inyi.
And as usual, that's where we draw the curtains for today. Remember, at 1:30, I'll be back and to give you update from the world of business. And remember that conversation with the UK. By then, we would know the new Prime Minister and conversations all around that. But that'll be at 1:30 for now. Enjoy the rest of your day. I'll see you at 1:30. I'm Ini John Mekwa.